What's up traders, welcome to Failure to Displace. In this video we're going to take a look at this morning's London session on EURUSD, where we had a very similar repeat execution from yesterday's pound entry, which was a 1 hour unicorn. Upon tapping the 1 hour unicorn, we did get presented with a 5-minute unicorn, which wasn't entered. However, I did paper trade a couple of entries that are really interesting that I want to document. So we'll jump into the analysis now and see what led to these two entries. So here we are on our daily time frame, as always, trying to establish our daily bias. So what we're looking for on the daily bias is where are we delivering from? Are we delivering from internal liquidity to external liquidity, or external liquidity to internal liquidity? But before we jump into the analysis, please do me a massive favour and drop me a like on this video, because I'm sure you're going to find it really insightful. I'm quite excited about the analysis here. Smash that like button, and now let's jump into the actual analysis. What we can see at this point is we have swept external liquidity, so we do have a swing low here, and we swept into internal liquidity, which was this fair value gap. So we've got a bullish fair value gap on the daily time frame. So if we are delivering from a fair value gap, we would expect price to now seek external liquidity. And what we've got as external liquidity is two really nice equal swing highs up here. So my bias has now flipped on the euro to a bullish bias. We can see that this fair value gap was respected on yesterday's price action. So this was Wednesday the 17th. We had a bullish close respecting this fair value gap. So coming into today's session on Thursday, I'm expecting continued bullish price action, looking for these relative equal highs. So I'm going into the session with a bullish bias. Let's drop onto the hourly now. So here we are on the hourly chart. We can see the respect of that daily fair value gap here, and price is now displacing much higher. So we tapped 50% of that fair value gap, had a really solid reaction from the New York AM session through to the New York PM session, leaving displacement higher. So the hourly is showing us bullish intentions at this point. We obviously had an hourly break of structure here, and we've left a breaker block at this point. So on the hourly time frame, significantly, we have a unicorn entry on the hourly. Our unicorn entry is a breaker block, and inside that breaker block we want to see a fair value gap. So we have displacement through the breaker block, we've left a fair value gap, so we've got a bullish fair value gap inside the breaker. This is leaving us an hourly unicorn entry. We do have further upside here, so we've got a bullish fair value gap which has been respected through the Asia session. Well, obviously we have this previous bearish fair value gap that was resistance initially on Tuesday, driving price lower. This has now been flipped, so this is potentially an inversion fair value gap. So we're seeing from this on the hourly that bearish PD arrays are being closed through and disrespected, and bullish PD arrays are now being respected. So this is a good indication that we are onto a buy program. This supports the thesis that we should expect higher prices. So what we're looking for is points of interest now where price may return to offer us a setup to get in a long trade, targeting those relative equal daily highs. Obviously we do have this 1 hour fair value gap as a potential area, still quite high up in the range. This breaker block 1 hour unicorn would be perfect. So we had a similar setup to this on the pound from yesterday's video, where price came into the hourly unicorn. We dropped onto our lower time frame, looked for a confirmation entry for price to accelerate away. So I'm hoping that we'll get a rinse and repeat of that unicorn with a unicorn confirmation on the lower time frames. So we're going to drop to the 5-minute now, start scrolling through our price charts. Our session for London starts at 2 AM, 2 till 5 is the trading window. And let's see what we're given. So we have swept the Asia high, but we are not looking for short trades. I am only interested in longs because I do have that daily bias being bullish. Huge move down. So these highlighted orange areas are new week opening gaps. You can see how price is kind of sticks towards these. It's attracted to them and hovers around them. So we've kind of been in there over the Asia session, pulled away, we're now back in it. Closing through the new week opening gap now, so we're approaching our hourly unicorn. And there's the tap of the unicorn. Key points of time that we are interested in within our trading windows are, and I do have the macros indicator on, but it's not working on replay mode. We're looking at 3 AM is the silver bullet. 3 till 4 is our silver bullet hour, so we could potentially be looking for a reaction within silver bullet now. Looking to pull price higher, seeking relative equal highs that we've created up here. And after the silver bullet at 403 to 430, there is a macro, so this smaller window here. So this period of time here is of interest to me. Specifically, I really do like this 403 to 430 macro. I'm trying to refine during a back test if I can literally just come to the charts for the 403 macro just to execute, which would eliminate me having to sit at the charts for 3 hours. I can isolate it to just a half-hour macro, which seems to be really, really powerful. So this is the 403 to 430 macro again, where we can get an injection of volume. There is a macro at 233, so I'll drop a line on this as well so we can see the macros. So there's a macro before silver bullet. We then have that macro finishes, we then have the silver bullet hour, and then we have a second macro at 403. Something that is worth you guys noting, and what I'm seeing, is that price in the macros seeks out liquidity from previous macros. So I use an indicator called ICT macros by Lux Algo. This is what it looks like. It won't play back in replay mode for some reason. However, in live time, this is what the macro looks like. Let me just get on full screen for you guys. So it's plotting the macros here and here. And one thing that I'm noting is that when we put in a macro, when the next macro opens, often price will seek liquidity from the opposite side of the opposing macro. Or, indeed, if we have macros from previous sessions, I'm not sure if I've got any examples here. You may find it will sweep liquidity from one macro and then seek again liquidity from the other side. So the macros do seem to be a draw on liquidity, as well as a point in time where price spools. I am seeing that these macros will act as draws on liquidity and levels for possible reversals as well. So what we're looking at in this one is I'm looking at the macro that we've created. We have a swing high at this point. So this is the macro high. And then the macro low, which we are closing through into the silver bullet hour, coming into now our unicorn model. So here's silver bullet. So we're looking for our 5-minute unicorn model. So this is going to be a stop hunt with a break of structure, leaving a breaker block and displacement fair value gap. So here's our stop hunt. So we have now at this point on order block in this area. So if price were bullish, we would close through this order block with displacement and use it as support for further upside. Keep an eye on the order block. We're looking for a closure through. We don't get that, so we now break even lower, which means that we now have a slightly lower order block. And significantly, we have just come into the 403 macro at this point. So inside the 1 hour unicorn, this is a sweep of liquidity, just to confirm if we move that. This candle here has broken liquidity at this point. Obviously we've got a break of structure now at this point with a large engulfing candle into the new macro. So for our 5-minute unicorn, we are looking for a 5-minute close at this point, leaving a fair value gap in here. So this is our fair value gap. This is our 5-minute unicorn. We've got a fair value gap in that area. This order block now becomes our 5-minute unicorn. And what I've seen from backtesting is often if price is very bullish, we never get tagged in on the 5-minute unicorn. So what I did on a paper trade, so this isn't part of the plan, I dropped to the 1-minute time frame. And this is something that I got from a trader that I've seen trading live. This is very much like ICT, or how ICT executes himself. We've got the bullish bias for the day. We've seen displacement now on the 1 minute. We've got a 5-minute break of structure on here. Every down closed candle should act as support. So there's a trader called CJ Trades. He's a charter member from ICT. He's doing live streams in the New York session, and when you watch him trade, he trades very similar to this. We've had this order block with a fair value gap just above it. This should act as support now if indeed we are bullish, which means if price is going to displace higher, you would take a trade expecting this order block to hold. Tap of the order block is the entry. And as I mentioned, my limited research that I've seen is that price is drawn to opposing macro levels of liquidity. This is a monster 4-hour trade. So again, I paper traded this. I didn't trade it in real time because this is something that I'm just trying to work out and I'm going to back test. This order block should hold with a fair value gap. We've just tapped the top of the order block on that candle there. We've created relative equal highs here. So price comes back, digs a little bit deeper into the order block. We've got the 50% consequent encroachment of that order block. We've rebalanced this fair value gap now, so there's no inefficiency here. So there's no need, if price is bullish, for us to come lower. We don't want this to fill in. So this, I believe, is what he calls a breakaway gap. So we don't want this to get filled on the 1 minute. We're expecting price to accelerate away. We're inside a macro where price should be driving to a level of liquidity. My belief is that level of liquidity is the previous macro high from 203 to 230. And price does indeed respect the order block, distribute away. We then create a second order block. So this is where you often see ICT laddering into trades. So we've got another order block on top of here now that's being created. You can see just inside here is a bearish fair value gap immediately being closed over. So we're disrespecting fair value gaps. We've layered another order block on top of this order block. Now I'm sure there's names for these, propulsion blocks and all that kind of stuff. I'm not sure what they are. This is me just testing a new theory out. If we leave a fair value gap, for me that would confirm this order block. So we leave a bullish fair value gap inside that order block. So for order blocks on any time frame, for me, for them to be valid, I want to see a fair value gap aligned with the order block. Very similar to the unicorn, where we want to see a fair value gap inside the breaker. I want to see order blocks creating fair value gaps to show that there is support there. So this now, this down closed candle has a fair value gap within it, confirms it as a valid order block. Take a second entry, stop loss below the low. So this is where you could potentially be laddering in. And again, we're expecting price to run inside the macro, targeting the opposing macro high, so just over 2.7 and a 4.1 hour trade. You see price does come back in, interacts with the order block, nice strong reaction. We do have the fair value gap, so we may come into the fair value gap to balance it, but price begins distributing away. Fair value gap left here, so we're getting displacement now higher, coming towards the end of the macro, so we're seeking this macro high. And would you know it, right at the end of the macro, we take that high, bagging 4.6 and 2R. And ultimately, what I've noticed in my back testing is that when price is bullish in these macros on the 5 minute, often we don't get tagged in. So that 5 minute unicorn was never entered. So there was no trade there. So we were able to bag 4R by on the 1 minute analyzing inside the macro that price is driving for opposing liquidity. And the 5 minute unicorn has never been tapped. Because price has run so far from the unicorn now. Sorry, the chart's looking a little bit messy. Let me clean it up. Because we've run so aggressively from this unicorn entry inside that macro, well, the macro indicator's working now for some reason. Inside this macro, would you want to take a long position on a retracement of that? I'm not so sure. I mean, I've still got a draw on liquidity up here. We're going to come up to live time in a moment, so we're not going to find out in this particular video. But would you want to have a trade? Stop loss is going to have to go below. You've almost reached the 2R on the 5 minute already. So if this retraces back here, it's not a particularly good sign in my opinion. We've swept the macro high and we are getting some kind of retracement. So we are coming back. So potentially this 5 minute unicorn may get triggered and result in a long trade. So I will monitor this to see if this does play out. However, I thought it was very interesting looking at the 1 minute executions now that we had a essentially 5 minute breaker block confirmed with displacement on the 5 minute. 5 minute with a fair value gap. So we have obviously the unicorn on the 5 minute confirmed, drop into the 1 minute, looking for then continuation off 1 minute order blocks with fair value gaps inside them. Again, executing inside the macro, targeting opposing liquidity that was generated in a previous macro. So I think there's something called time-based liquidity. Macros are generating time-based liquidity. So we take a run on the previous macro and now we're pulling back into our 5 minute unicorn that does rest with inside the 1 hour unicorn. So I hope that was useful. I really wanted to get that down on video because this is something that I'm going to come back to. This is something I'm going to back test as well, just to really kind of refine this entry system. But I thought it was very, very interesting, and this is the kind of executions that I see ICT and CJ Trades, the charter member, executing, and you're like, wow, that's just amazing. It looks like witchcraft. This is how it works. If you found the video useful, do please drop it a like. If you have any comments or feedback, drop it down below. I'll always be interested to hear your thoughts on this kind of entry system. And likewise, if you're enjoying the content, consider subscribing, dropping videos like this every single day. Hopefully we can all learn together. It'd be fantastic to have you on board. Thanks for watching. I'll see you again in the next video.